All right, let's start off with this. These tariff announcements, the fact that tariffs were delayed, are there actual trades to be made here, either in the equity markets, the bond market, or the currency markets?
Yeah, I think so. I actually don't like the euro. I actually think the euro is probably the most vulnerable, especially, I mean, in the face of the tariffs. You know, as you know, Trump has been very upset with the so-called VAT in Europe, which is about 20%, which he views as equivalent as tariff on U.S. imports. Now, moreover, I think until last week, a lot of people were thinking that because of the Ukraine war, that the Europeans wanted to keep the U.S. on board and therefore willing to negotiate and even compromise. For example, there were basically rumors that the EU was about to literally cave in and agree to lower tariff on imported cars from the U.S. to 2.5%. However, I think the J.D. Vance last week was no less than earth-shattering, in the sense that it really signals the U.S.-European alliance at a complete breaking point.
Okay, so
in
if
that
we're at a breaking point,
I think at this point the Europeans don't want to negotiate with Trump.
Okay.
They might decide just to stick it to him.
All right, so it sounds like you want to short the German DAX or the euro, the euro right now. What are the other plays we can do now that we have just a sense of what the state of play is between Europe and the U.S.?
I think, exactly. I think there's also the election coming up. I mean, let's put it this way. The reaction to the Vance speech over the last 48 hours have been just absolutely total outrage in Europe. I think just they don't get it. They don't understand to what extent Trump administration is a huge issue. Basically, Trump is saying, like, you know what? Given we no longer have shared values, given the way we've been cracking down free speech, we don't even want to defend you anymore. Now we have a major election coming up in Europe. I think, in Germany this weekend, my view is that the right-wing, AfD party is probably going to do better than most people expect. And I think in light of that fact, given the massive rally we've seen in DAX over the last basically 3 weeks, I think it's definitely a sell on rally story. In fact, I think, over the next 3 days, we're probably going to see some money coming off the sideline.
All right, Dave, let's bring it back to the U.S. For U.S. investors, you're talking about some foreign markets right now, currency a bit more sophisticated. But if we're just talking to just a more general U.S. investor, what are some other plays? Are there plays in the Treasury market based on some of these tensions that we're seeing?
I'm bullish on U.S. Treasuries, and I haven't been bullish Treasuries for the last 3 years. And the reason is because right now the market's only pricing in one cut by the Fed for the remainder of this year. I think the Fed is going to do more than that, and the reason is because of DOGE. I mean, just think about this. Trump has now just think about this for a moment, what your previous guest was saying. The U.S. Government Accountability Office, which is a congressional watchdog, says that every year the U.S. government is paying out something between $350 to $500 billion spending that's associated with fraud and benefit abuse. If DOGE can basically take care of that, that will more than offset basically extending the tax cuts. What I'm telling you is that right now everybody is in denial about what DOGE cannot and cannot do. My view is that the spending cuts that are coming this way in the U.S. in 2025 is going to be very significant. So significant, I think the U.S. economy will slow. And I think that will give the Fed the perfect pretext to cut interest rates. And I think that will be very bullish for U.S. Treasuries, no doubt.